Hello, everyone. Good morning. It's great to be here. A beautiful day in such a beautiful place at a very important time for many, many reasons. But we're here today to talk about the challenges that the defense industry and our government faces as a result of the pressure from Wall Street. How does that quarterly earnings report affect the ability of our government to innovate and protect us? And it's a big question, it's an important question with lots of ramifications for years to come. Here to discuss this and attack this problem, we have Mr. Michael Leskinen, Executive Director, Aerospace and Defense, JP Morgan. He's the Wall Street guy that's basically demanding all these things, so he'll have some good insight for us. We have Mr. Shah, Managing Director, DIUx. He's part of the entity, $200 million fund that the government has out in Silicon Valley to go out and acquire new technologies and find the neatest, coolest things on the horizon that can really help us. We have the Secretary of the Navy, Honorable Richard Spencer, right here next to me. And we have Mr. Michael Strianese, Chairman and CEO of L3 Technologies, who also is looking for a lot of this technology that he can then present to the Secretary to see what it is that can best protect us. Anyway, I'm going to kick it off. We're just going to have a conversation here. I want to remind you all to jump into the conversation. You can do that online through the RNDF mobile app. And anybody watching at home, if you have any questions, just submit them to us on Twitter, and we will be watching for all of those. Twitter at #RNDF, anybody who's watching online or on Fox Business right now. So let's kick it off. First, Michael, tell us about what it is that you want from an investor's standpoint from these companies like Mr. Strianese's. What is it that you want? What is it that you need? What do your investors expect?
Well, first of all, Trish, I want to thank you for being here. It's a real privilege to be with this esteemed group, so thank you for that.
Yes.
I would say, the topic of putting more money into the business is something, the primes are doing more of already. You're seeing more IRAD, but it's not at a level that makes the department happy. And as an investor, there are trade-offs. I can take a dividend, I can ask for a buyback, where the companies can invest in the business. For me to want to allocate my shareholders' money to companies that are investing, I need to see three things. I need to see stable budgets. That's not necessarily 10 or 20% higher budgets, but it's stable budgets that can be planned on. China has a 5-year plan. You can plan with 5 years, and companies can invest with 5 years. I need to see that. I need to see companies be disproportionately rewarded for taking risk versus not for taking low risk in production programs. That should be a lower fee versus programs that you may innovate, spend IRAD on, and then you don't actually win the production phase. That does not incent investment, and I'd rather see a dividend buyback if that's the case. And then thirdly, I think important from the department standpoint is you want to see companies rewarded for past performance and vice versa. And so if you're on a tanker or an aircraft program and you did not deliver on time and on budget, well then that should have an impact on how likely you are to win the next program. And when I look at how programs are awarded, that doesn't happen today to enough of an extent. So those are the three pieces I would focus on.
Mr. Secretary, when you hear this and you know that there is this pressure from investors like Michael and all of Wall Street, they want the most out of these companies. How do you think about it in terms of making sure that you're getting the most, in terms of the most innovative technology that's out there for our use?
Hey, Trish, it's fascinating. Having come from Wall Street, everyone's saying, old friends are calling up and saying, what's it like to work inside the Pentagon? And if you look at the job of the Secretary of the Navy, man, equip, train, and deliver, the Title 10 hat that I wear is running a business. I have a budget, I deploy the funds, I get the equipment, I paint it, and I deliver it to the combatant commanders. It is imperative for me to be a responsible consumer, a responsible client. And the word that we are putting out right now is that, and this starts from the top on down through Ellen Lord, we want to erase the whiteboard and get away from transactional relationships in the general sense and really welcome partnership with the industrial base. And what do I mean by partnership? What I mean is shared risk, shared benefits. We want to make sure that we are taking risks and that risks are being shared. The government shouldn't take 90% of the risk and leave 10% of the ups. It has to be distributed. It's incumbent on us to send that signal out to the industrial base. Norm Augustine told me once, he goes, Richard, stop ranting about the industrial base, what it's doing to the Pentagon. They're simply mirroring the system that you have. And it's human nature. It's true. So we have to change that. And we are looking forward to opening the doors for this relationship concept. It's out there. I know it'll come. We have relationships now, but just to strengthen them, because I don't have the amount of funds that I need for the requirements that are being heaped on me. I need to increase my capabilities in every single aspect where I do business. And the only way I can do that is by working in partnership with the industrial base. And in that line, that sends the trickle down to Michael, who's going to make the investments appropriate, because capital is the universal lubricant for my business in order for my suppliers and my supply chain to function correctly.
And Mr. Strianese, you're kind of caught in the middle here, because you got Michael, who's demanding those quarterly earnings. You've got a client that wants the best technology for the future. So how are you thinking about it?
So there is the dilemma. We are public companies. We're subject to the competitive pressures of competitive capital markets. We have our customers, which we care about, that need technology and need investment. We have our shareholders that would like a market return. You know, we are not the only industry that you can invest in. There are other industries that I'm sure Raj sees every day on the West Coast that produce returns way greater than the defense industry. But you know, we are an industry known for being predictable and over the long term generating reasonably good returns. However, I think as a result of the past decade of shrinking and flat budgets, it's been very difficult for many of the companies in the industry to make investment decisions that were for the long term because of the lack of certainty of whether there would be a program, how long it'll take, whether I'll ever get the money back, whether it'll be terminated. And you know, then you start missing earnings and you run into problems and you get a nasty call from that guy, or even worse, you'll have an activist show up, and you know, that's, yeah. I've had the personal pleasure of dealing with that, and fortunately we're still here,
yeah.
and they aren't, so, but it's, well, and I'm happy to say that, but it's a dicey environment. I mean, we want to keep our customers and our warfighters the best fighting force the world has ever seen. The U.S. military has always had a substantial technology advantage, and I think we have a bit of a deficit that's occurred over the past decade that needs to be brought back. And we need to be, again, competitive within the capital markets so that we are viewed as an attractive place to invest. And it's a balancing act.
For sure, and I want to circle back to that, because I think, you know, the activist investors are very much sort of a new phenomenon, certainly in the last 5-10 years, at least the extent at which they're operating, and that makes it challenging for any business, but it adds on a whole other layer when you're talking about the defense industry, because it's so relevant, of course, to you, Mr. Secretary, and to all of us in keeping us safe. But before I do that, I want to go over to Raj for a moment, because you're part of what the government is trying to do to discover these new technologies before, say, L3 does or before Wall Street does. Tell us about your process and what you're doing.
Sure, and thank you for this, the invitation to be here as the Department of Defense's representative out in the Valley. It's great to be on the Wall Street panel. Mm-hmm. You know, the nature of warfare is changing, and it's being driven by technologies that are, whose development is being led in the commercial sector, right? There are slews of startups, large tech companies that are building technologies for their own commercial markets that are going to play a major role in the defense of our nation and on the battlefield. The Pentagon used to be a monopsony buyer and buying bespoke stuff for ourselves. That world is changing, and it has a lot of implications for us. One, these companies are going to build this technology whether or not we participate or not. I think about artificial intelligence and autonomy, how it's disrupting the financial markets, how it's disrupting technology companies, right? It's embedded in all the phones that you have in your pockets right now. You have real-time translation of any language. That didn't exist 5 years ago. It's the world of self-driving cars are on the way. But all these things have military implications. And because two things, right? One, this tech is moving so fast. And two, it is accessible to our adversaries. We don't have exclusive rights to this. And so what's most important is not necessarily just the protection of that technology, though it's important. It's how fast we can ingest and incorporate that into the hands of our men and women on the battlefield. And so, I think we're seeing a slew of different things that are really interesting. We're seeing the use of drones, commercial low-cost drones by our adversaries. There's some noted cases of ISIS and others taking a hobbyist drone and putting a grenade onto it and impacting our troops. We have to react to it. We have to think about our approach. I think on the last panel, actually, there was a discussion about how much data we collect, overhead imagery, full motion video. We can't have humans looking at those screens. And so that's another piece of critical technology. And we can talk more, but I think the good news is that the capital markets, even the early stage capital markets, are beginning to look to department problems as ones they want to solve and invest in, and that bodes well for us.
Mr. Secretary, how has investment in technology changed over the last several decades? When you think about the military, it kind of feels like, there was a time in history where we were pouring all kinds of resources into defense, and we've backed off that, and I think defense has had to change in many ways, including the military, because much of this now is outsourced, and that may be far more efficient, but walk us through that change and the current state of things now.
Yeah, it's very interesting, Trish, in that if you look back to the days when DARPA was new and you really had the Department of Defense leading innovation, literally between NASA and DOD, they were probably the biggest innovators, back in the 50s, 60s, 70s. Commercial world caught up. The last 10, 15 years, you look at what's happened to us on a budgeting cycle for the DOD specifically, and the requirements and tasks that we'd received to do our job, we no longer had the money to make those investments, and it naturally trickled away. I mean, if I was to look back over the last 10 years, and I just talked about the responsibility that I have of being a good client to my suppliers and my supply chain, we've obviously I won't say we've sent a failed signal. We've sent a signal that we're not investing because you have the primes in the largest stock buyback and dividend send back because they don't find any opportunities that we're giving them to invest in on a business case basis. So bad on us for not crafting a good enough message, but more importantly, bad on us for not having a sustainable source of resources to signal to the marketplace that we are in this for the long run so they can afford to invest the dollars to make the return so Michael invests in their companies. It's a true relationship. It's symbiotic. And I don't know if it was truly understood inside the building, the responsibility of being a good client, to be very frank with you.
Michael, at L3, you want the best, most cutting-edge technology to show to your clients, but how do you do that in an environment that is so driven by a bottom line, and how critical is knowing that your client's going to be there, supportive of the projects that you're investing in terms of your overall portfolio?
Well, we're very confident our client will still be there. The question is, where will the Congress fund our client? It's beyond even the best customer's control. We, like all companies in this industry, I believe, invest at a certain base level in R&D, a couple of % of sales, we can call it. And we run into the problem where there's an urgent requirement because of a deployment or whatever the case may be, a new threat is identified, and you need to leap forward, as they say, and invest in a new technology or a new system that can counter, and keep our men and women in uniform safe. And making those decisions have become a little bit more challenging when the funding is not as clear. So, not like unlike our adversaries, whether it's Russia or China, who have state-run industries that they can do anything they want without any, they can act a lot faster. We don't make anything in the Pentagon, as you know. There's not tanks and ships rolling out the back door there. It comes from industry and it comes from us. And we need a tighter relationship in terms of the budget certainties and things that would give us the confidence to lean forward a little more and not run into problems with our investors.
Well, I can put a point
Absolutely.
on that, which I don't know how many of you in the room have really paid attention to this, but the Budget Control Act, sequestration and the caps, I was asked by some of my board of directors on the Hill to ask what that has cost the Navy. The last 9 CRs have cost the Navy in the neighborhood of $4 billion. That's not opportunity loss. That is putting $4 billion in a trash can, putting lighter fluid on it, and burning it. Wow. And that's exactly, this is the symbiotic relationship we have to have with the industrial base. That's a tough environment to work in when we think we can turn a switch on and off to build a ship or to fund a project. And the whipsaw effect, let alone what happens to the Pentagon's delivery schedule and cost of dollars, it trickles down to our supply chain and our suppliers in a magnified manner.
Trish, if I might just expand on that.
Go ahead.
I would say, the returns in the defense industry are very good. This is a great business. It's not a question of not investing in it because of the current returns. It's a question of, if I invest today, is that going to drive more revenue in the future? And with sequestration, you don't get there. With OCO funding based budget requirements, you don't get there. And that's the hesitancy to invest. You said that Mike's kind of in the middle between the customer and the investor, and that's not exactly true because we're aligned. The business is good. If I see revenue growth driven by IRAD, I'm going to support investment all day long. And then the second point I would make is on development, on new programs. If returns are commensurate with the risk taken, I'm going to encourage more speculative investing. And that means that if you're spending money 5 years early to develop some new technology, the return on that when it comes to fruition has to be higher than something that you're going to turn around in 60 or 90 days. And right now, the acquisition rules don't allow that, or it is not utilized to the extent it should be.
So what does that mean then for a company like L3 if the acquisition rules don't really, do you feel, are you in competition, by the way, with Raj, who's out there trying to find these new technologies in Silicon Valley? You've got to find them too and hopefully acquire them, because I would think it's cheaper to acquire them than to put 5 years of capital expense into something and not know whether it's going to pan out or not.
True. And we don't know if we're going to compete yet. I'd like to think we'll be partnering. And doesn't really serve either of our interests to make things more expensive. But I would say to some of the discussion, let's just follow the money over the past several years. This industry has plowed tens of billions of dollars into share repurchases. Why? Because we had a certain return. In fact, it was a risk-free return if you think about it. We're investing, we're buying shares in a company we know best, our own companies. And that has an effect of growing earnings. It wasn't in tomorrow's technology, it wasn't in future production. It was very simple. That was the only place to go during a number of years when the budget was contracting and shrinking and looking forward to a smaller pie for the next year. There's not a lot to think about on that if you want to sustain your company and operate in this competitive capital market. And I think that's what we've seen. I think we're just coming at the end of that cycle. Because we've shifted back from predominantly repurchases to some acquisitions and some more R&D. We've bought a number of companies over the last couple of years and have made investments in areas that aren't quite funded yet, like undersea vehicles. But we have enough confidence that our clients are going to get there.
Michael hits the nail on the head. One of the things that we're going to have to do, we've been nibbling around the edge for reform of the acquisition policy. In fact, a funny story, when I was spooling up for confirmation, I got a briefing on the acquisition Instruction 5000, and had 2 generals and 2 admirals briefing me, and at the end of the table was, Marine Corps captain and Navy lieutenant, Marine Corps captain, and I always love speaking to the junior officers, and they're through, and I said, what do you two at the end of the table think about our acquisition program, Instruction 5000? And the Navy lieutenant chins it over to the Marine, and the Marine kind of looks down and says, well, sir, if it was up to me, I'd stamp top secret on Instruction 5000, leave it on the Chinese embassy steps, they adopt it, and we win.
That's very good.
And that kind of sums it up. So we have to actually get after this. We're doing great things like DIUx. It's terrific. Ellen Lord is leading some great reformation. We have cells, fast buy cells. We have to make sure it impregnates the whole organization. Because we are our own worst enemies in some cases. We sit here and from my point of view, we say we need this top line, we need. We do. But we also need to do some work inside the building, make sure that we spend your treasures the best way that we can. And we have to have the tools to do that. Industry's ready. I mean, as I referenced earlier with Norm Augustine's statement, if we change the process, industry will adapt to that process, and we have to go back to where we both share risk and share returns.
I'd like to actually address that and head on the last comment about the partnership between the commercial sector and industry. Commercial technology and businesses underpins both the hard and soft power of this nation. So I don't think there's any daylight, or shouldn't be any daylight between the innovation economy that we've seen crop up over the last decade or two, and our important partners in the defense industrial base. To be more specific, you have young companies that take high levels of risk, high technology risk, that are backed by venture capitalists that understand that risk. But when they find something that works, a particular type of technology, and then we want to bring it to scale, right? The department has 3 million people, the largest organization in the world. If we want to bring it to scale, this is where our industrial partners are absolutely vital. They understand the process. They have the relationships. They know how to work in austere, classified locations. And so, what we've seen from our vantage point is the most successful efforts are taking, our best young companies, emerging technologies, and fusing them with our industrial partners to say, let's bring the strengths of both together, and we can do it in a timeline that's much, much faster.
Mm-hmm. Michael, in terms of where these companies are trading, I think that, in part, the surprise over the election caused a lot of upside in defense companies that wasn't necessarily built in. So the sector, as you pointed out, is doing extremely well. Where do you see it heading over the next 6 to 12 months? The PE ratio sort of overall for the sector, what the valuation is, and where it goes or where it can go.
Well, I'd like everyone in the room to buy J.P. Morgan's funds. And no, but look, the sector is valued at top 5 percentile of where it has been historically on a relative basis. And so to see the multiple expand from here is tough. But to see it contract, I think, is unlikely as well, because the cash profile of the business is strong. The budgets have turned. The degree to how much they have turned is still in question, but we're headed up from here. And the returns are stable. And so that's a very nice setup in a relatively slow growth world in a very attractive industry. So I think that's stable, and that you see earnings growth drive stock performance from here. I'd like to see the players that are investing IRAD, as an American, I'd like to see the customers that are investing in IRAD get a disproportionate amount of the top line growth. And if that occurs, then the differentiation in performance will come from that top line growth. And I think that's what the department would also like to see. But I use the opportunity as we're talking about partnering, because it's a commercial analog when you think about what Boeing has done with Partnering for Success. And some in the industry would say Boeing has gone a little too far with that, but the concept I think is important, and I think that the DoD could adopt it. And that is, on key programs, legacy programs like the 737 or the 777, there are contracts in place for Boeing to deal with their suppliers, whether it be Spirit Aerosystems or UTX or Honeywell. And those contracts say, for this part, you're going to pay X. But it's a very competitive business in commercial aerospace, and so they've been trying to drive costs out. And so what Boeing has come up with is Partnering for Success, and that is, okay, we know contractually you can charge us X for this piece of landing gear, and we can't outsource it to somebody else. So this is a monopoly monopsony, very similar to what we see with the primes in many cases in DoD. But they say, so if you work with us on this program, then when we come out with the next airplane, when we do the next middle of market aircraft, or we do the next variant of the 787, you're going to get more business from us because you're partnering with us. And that requires program managers to work across programs at a higher level. And that's something that I think is low-hanging fruit for the department to do.
And here's where we're going to have to change our acquisition parameters. One of the most fascinating things that I've had to do so far is the P-8 program, which is the new Navy anti-sub. It's a 737. And if you look at what goes on with the 737 on the commercial side, and now we're a military buyer, you almost think we're built, COTS, commercial off the shelf. It's not quite there, but it's pretty close. And you look at exactly what Michael's talking about, and Boeing has a service, Boeing Commercial Services, where 24 hours the plane doesn't remain on the ground more than 24 hours. They dispatch the parts, et cetera. And I was saying, why didn't we sign up? Why can't we take the mindset that we're buying readiness? I don't care. I don't want to actually own parts in the bin. I want to buy readiness. So I'm buying 99% up. How the supply chain gets it there and does it, that's the value they provide me, and that's what I compensate them for. We couldn't use that system because there was no way for us to validate what a true price was because of the way that Boeing handled it, which was not their fault. That's the way the commercial world looks at it. So to adopt some of these programs, which are low-hanging fruit, we're going to really have to change the way that we do business.
Michael, what do you think some of the most exciting technologies are that you have in your pipeline and in terms of what's on the horizon, and how does that get presented to the Secretary?
Well, we have regular dialogue with the Secretary and the staff, but we've invested this year in undersea vehicles, including the much-needed propulsion that does not rely on lithium-ion batteries, which I know it's been very clear. The message is we don't want lithium-ion batteries on our ships and on our subs, so come up with something else, and we have. And we'd love to demo it shortly. In fact, I think the Navy has witnessed a couple of demonstrations and was very encouraged with the progress that we've made. So that is one example. Another example where we saw a problem that needed solving is the congestion in the airports going through the checkpoint, and which is something everybody loves to hate. And
Indeed.
When people don't recognize who L3 is, I just have to do this, and they know who we are when you go through the airport. But we've invested in a number of companies that have technology, or we've developed it on our own, where the traveler does not have to divest liquid from their bag or a computer because the machine will identify it as an explosive or an energetic material or not. And that's, the hope there is that we'll get the lines moving faster and the public will be safer and we'll get some enjoyment back in our vacation travel. But
that would be that's a tall order, but we'd all appreciate it for sure. So walk me through the process. So are you, Mr. Secretary, saying this is our problem, Michael, can you solve it? Or are you, Michael, saying, hey, I'm seeing this and this and this and this on the horizon. Maybe that would make a lot of sense for the U.S. Navy?
More the former than the latter, and I think we have to shift that. Our primary job right now, as defined, is to provide the requirements to the industrial base of what our problem is, what the problem set is, and say, okay, you guys go back, spitball, do your R&D, and come back with a solution. Raj is a perfect example of how we're changing it. We also have to be out there with the periscope, looking around, going, okay, here are atypical or non-standard developments that are out there in the marketplace that we wouldn't see normally through our traditional supply base or suppliers. We have to be doing both, and we have to be doing the latter more now, and I think Raj is an example of how we're approaching that. But it is definitely it's a communication layer, give and take.
Yeah. Raj, your group is pretty recent too, right? Just you were 18 months ago?
Yeah, it's an 18-month organization. But I think especially as we're on a panel here talking about capital, I think one of the challenges is how do we adequately fund and invest in commercial technologies that may not meet that quarterly earnings impact. And the real challenge and driver here is that our adversaries are not waiting. They recognize this. And so I'll share a couple of stats that we've looked at. If you look at all venture deals in the United States in 2015, 12% had an investor from China. That's up from 6% in 2010. If you look at certain technologies, such as robotics, in particular, 17% of the funding was from China. And so, you can make determinations or observations of why they're doing it, but if we think these things are going to be military relevant in the future, them getting a seat at the table early, prior to our regulatory CFIUS type of activities take place, that's a big deal. And candidly, they're quite open about it. So they set up 2 venture funds this past year. There's a $1 billion fund focused on taking technologies from our universities and commercializing it, entirely Chinese funded. There's a $500 million fund that just started last month in San Francisco that is focused on these technologies, artificial intelligence, autonomy, machine learning, robotics, and it's a sovereign wealth fund, right? And so, it's the challenge for us, I think, is, we look at our economic arm and our national security arm quite separately. And if our adversaries don't, and technologies are moving fast, we have to think about how are we going to react to that. And it's going to take a partnership.
No, it's alarming. I mean, so yours is 200 million, and they've got $1 billion and 500 billion, the Chinese. I mean, look, let me ask you this. Are they spending the money from what you've seen wisely, or are they just throwing money at the problem? I guess if you throw enough, you're likely to
yeah, well, that's the word of venture, right?
To get lucky on a few, but is it money well spent, or are they just gobbling up everything they can think of?
That's the world of venture. You don't know if it's a good bet till 5 years down the road. So maybe it's a foolhardy enterprise. But if we know that these things are important, it is incumbent on us to play a role in that. And it doesn't necessarily have to be an investment fund, right? We're not an investment fund. We are writing very quick contracts to bring that tech in. But it goes back to what the secretary said. How do we do this faster? How do we prototype and experiment? And that's the model that needs to change. And I think the good news is that we're seeing that in the department, right? One of the critical inhibitors for a young company to work with the department, particularly if it's a software business, is if you go into any leading technology company or startup in Boston Valley, wherever, and you walk into their office and you say, show me your server room, and you open the door, there's one Comcast box, right? That is their server room. No one has racks and racks of processors and memory anymore. They use the cloud. And so if you ask those same companies, hey, now come to the department, but we need you to build this immense rack and do stuff that's you haven't done since the 80s, it doesn't work. And so the department has launched an effort that the Deputy Secretary has put a directive out to help the entire department embrace cloud computing. And it's not just processing and memory, but it's how do you build applications in the cloud across multiple classification levels. And so I think we're starting to make those right steps to be agile.
And let me put an example out here, just so you don't think that the DoD is the complete troglodyte. We might have some calluses on our knuckles, but we're getting better. The other day, one of the greatest things of this job is exiting the Pentagon and actually going out and seeing the sailors and Marines. And I was out in the West Coast, and I had the chance to stop by an Amtrak repair facility, which is an armored amphibious vehicle. And as we finished going through it, there was this little Connex box, white Connex box, containerized box with an awning on it, a table with some parts. And as we get closer, I kind of figured out it was additive manufacturing that was being done in the field. And they had a couple of simple plastic parts, helmet visor adapter that had a 4-week wait, and it was a $400 part that they were making right there for, $14. But I got to the end of the table, and here was this amazingly elegant turbine that looked like if you'd cut a seashell in half. It had curved blades, and it was part of a FOD ejector for an Abrams tank, without getting too technical. But it sits there and spins and throws dirt out, basically, so it doesn't go in the engine. The part had a 19-week delay time. It's a critical part for the engine. 19-week delay from order to delivery, $23,000 part. A corporal in the Marine Corps took the measurement tool, the development tool, home with her on the weekend and put together an algorithm to CAD this thing. Comes to work on Monday. We have someone from SPA works there, a civilian, and she said, here's the algorithm. Can we get this produced? This is outside of San Diego. They find someone to CAD it. Put this thing on. First one failed. Second one got it. They're doing this in 1 week. If you take Rand's equation for what a corporal costs in the Marine Corps, times 14 hours, plus the aluminum, plus the milling charge, it was $2,300 to deliver that part. Oh. This is the speed of relevancy that we need to get to. This is the application of technology. We're actually doing it. The reason I wanted to bring this up to you all is to let you know this is happening out in the field. But this is the speed of relevance that we have to move at. Ironically, capital's not the issue. Capital moves quicker than lightning. We have to start moving in the speed of relevance.
Indeed. What do you say to that, Michael? I mean, has it been challenging for you guys to move as quickly as he needs you to?
But, these printers that can generate spare parts in the field have been something of great interest, where from a logistics standpoint, instead of going through a chain that takes 30 days to get a part to, a remote base, for not a lot of cost, you could have one of these printers generate the part on site, and especially where we're taking care of aviation, aircraft, helicopters, vehicles. There's a steady stream of part requirements, and that's an application of technology to a real problem that is existing today. I mean, given the number of basings around the world for the U.S. Military, the logistics chain is quite complex, and looking for 24-hour turnarounds on equipment is kind of the goal, I think. So.
But Raj, who do you consider the biggest threat in terms of having the most cutting-edge technology for their military right now?
The biggest threat, I guess, candidly, ourselves, the Department of Defense, in that change is hard. And, I think we're fortunate we have a senior leadership team that is very focused on modernization and ensuring that we never have a fair fight. The operators that we have on the ground, if you go out and see them, they're the most innovative people in the world. Like, we don't have an innovation problem in the department, right? You see this young corporal, he says, I need this part. He'll find the way to get it built. He doesn't want to wait, right? It's his neck and his fellow servicemen's necks on the line. But what we do have is an incentives problem, right? We have built a set of structures and rules that does not encourage speed, right? How do you have processes where you don't get fired for going slow, but you might get fired for making a small mistake. Mm-hmm. So how do we begin to make those cultural changes so speed in and of itself is something that's rewarded? Appropriate risk, right? We take risk all the time on the battlefield, flying an airplane. It's a calculated risk. We need to do the same in our administrative processes. So I think I look internally to the DoD and DC at large. But I think, again, the good news is we're starting to see change. Things are happening.
Michael, forgive me.
Can I do a punctuation on that? I can't stress that enough. Over the past, maybe it's 15 years or so, the organization has, in my opinion, has drifted away from risk management to risk amelioration. We're trying to get risk out of the equation. I can get you to zero risk. I can't afford it. We have to become true and get back to the game of managing risk. It's not going to be perfect. And I don't mean to talk cavalierly when it comes to life. That's not what I'm talking about directly. We have to be able to quantify the risk, manage the risk in order to get the best effectiveness and efficiency out of what we're doing. I think we've strayed away from that as an enterprise, and we need to get back there.
Any ideas, how to do that? Given your perspective on things as an investor, you're constantly managing risk in your portfolio. How is it that this industry grows quickly enough to meet the needs that we have while, simultaneously being careful enough?
Look, if there's budget, there will be plenty of investment in this industry. It's a question of budget certainty. It's a good
more money.
It's a good return in this business. We need to see a clear path to budget, and that's a political question, and that's the biggest cause of hesitation. I would make a point, though, on innovation in manufacturing. So we're talking about 3D printing and additive manufacturing. There's a growing number of products that can be produced that way cheaply, and in 10 years from now, there'll be a lot more. But I would say that the nature of our contracting as a government disincents that in many ways, because we give a 10% return on sales. And so if a part costs $2,300 and I'm getting a 10% return on sales, I make $230 in dollars. If I can figure out how to make that for $50, and there's no flexibility within the accounting that says, well, we should still be able to make a $200 profit or maybe a lesser profit, but you're actually cannibalizing your own business. And that's backwards. That's not a partnership. And so I think more innovative thinking around that could go a long way in pushing towards bringing we should be focused on bringing the cost to the taxpayer down for the best product for the warfighter. And that's not always the case.
Michael Strianese, how do you think about investing in different technologies when competitors, both in the US and overseas, are investing in similar technologies, and how do you get there first so that you're the one that makes money off of it?
Well, we're no stranger to acquiring companies. Probably been one of the more active players over the last 20 years. So, it's always a make versus buy. We can invest in the R&D and get there on our own, or we could just buy the company. I talked about the undersea project that we were working on. The power plant, if you will, I'm trying to avoid saying battery, because it's really not a battery. It generates current, it doesn't necessarily store it. Was a startup that I believe came out of MIT. And yes, it was a bit of a premium from what we're used to paying, but we had a lot of confidence in it. We just bought it. And we have it today, not 2 years from now. And, we've had the confidence in our decisions when we make acquisitions like that. And the same thing with some of the airport security or many of the other areas. We've been able to find technologies that really fit or complement what we do and just buy the companies. Usually
where are you seeing the most innovation? Here? I know Israel has a lot of tremendous innovation as well. Where are you acquiring it from?
Well, generally privately owned individual startups that are, they're not all garage shops, but they're generally small companies that have found the technology and have a number of customers they sell to, and we could take that technology and apply it to a broader problem that we see, or it fills a niche that we have, or will shorten the development cycle that we're undertaking. It's a great model, and it's served us well over the past 20 years. So,
Mr. Secretary, what is the technology that you really want right now?
There's no one specific, Trish. I mean, what we're looking at, I think a force multiplier for us, when I'm wearing my Navy Title 10 hat on, which is Navy and Marine Corps, is the unmanned sector, both in the air, on the sea, and under the sea. I think neural networks, artificial intelligence, whatever you want to call it, is going to be I think you heard General Goldfein saying it the other day, that we need to have equipment that thinks quicker, smarter, shares, and learns. And that's the punctuation mark, to learn. And that's going to be a force multiplier also.
I was interested in this. I was asking you about how much time you spend in a given week, how much, if you were to divvy up and say, percentage-wise, how much do you focus on this new technology and what's next? And the number was quite high, but I'll let you share it and tell
It's
us about
25%. And that is, in a footnote for that, that is problem solving with a technological bent to it. Yes, I mean it's front and center.
And what about you, Michael? As CEO of L3, how much are you focused on what's next? What is the technology that will drive you guys forward?
yeah, in connection with our business units, and we put our heads together quite often, it probably runs about a third of the time, reviewing where we are, where we need to be.
And that's like 100% of what you do, Raj, because you're always looking for the next big thing. How do you guys, as investors, Michael, think about the next big thing? And these, I mean, often these companies are too small to be publicly traded, but some of them might come out in an IPO. And are you looking for that next big thing as well?
Sure. Well, certainly at JP Morgan, on my team, we're dealing with large cap stocks. And so when I think about the next big thing, we're looking at the big program wins, B-21, GBSD, Virginia, Columbia class, the confidence we have in those programs being funded, and the confidence we have in the primes executing on those programs. And so I will differentiate where we're shifting our investment based on that forward look. And I think we're different in that we are looking at 5 years. Despite all of the uncertainty, that's my job, is to think about what this company is going to look 5 years from today, not what they're going to earn in the next quarter. That's a luxury we have that I think a lot of investors don't.
Okay, so I don't always hear that. And it may indeed be a luxury, because I think a lot of shareholders, they check their portfolio every single day. Market closes, they look, how did I do? I talk to a lot of investors that, mom and pop investors, the market did well, we can go out on Friday night. I mean, and you transfer that right to a bigger scale, to very large funds. I mean, Carl Icahn, great example, talking about an activist. He knows exactly what his portfolio did on any given day. He knows if he's up or he's down. And so whether it's, mom and pop saying, yeah, hey, we're going to go out this weekend because the market did well, or a billionaire investor like Carl, people care. They care whether they're up or down. So when you say, okay, it's going to be 5 years, how does that get received?
Well, we do too. I mean, listen, make no mistake. I know exactly how my portfolio has done every day, usually intraday. So the long term is made up of the success of short term. So if there's a piece of short term news that say a program, there's a mistake on a program, and that indicates that maybe this management team is more likely to screw up the next program, well, that will impact my investment. If they decide in any given quarter to make a thoughtful investment that will drive revenue growth in the future, well, then that's an opportunity. The stock probably trades off on that, but that's an opportunity for the long-term investor, and that's where we try to differentiate ourselves. But that's different from not knowing how my portfolio does.
Yeah, no, but it's hard too, because I think that and a lot of fund managers, they want to beat the S&P, and you've got people that look at their 401ks daily or weekly or quarterly. They don't want to be down. Nobody wants to lose money in an environment like we're in right now with the stock market hitting record levels every day. Fortunately, most people aren't losing money, so they're feeling pretty good about things. But I think, again, it gets back to the reality of how do you balance risk and success, Michael, because you've got to deal with these angry investors if you're not doing what they want. If they see red on the screen, they're not happy.
No, they're not. I can't say they necessarily have the right solutions either, though.
Are they not always thinking about it right?
I'm sorry?
Are they not always thinking about it right? I mean, are they too short-term oriented?
Well, yeah, in my experience, yeah, I mean, it was offensively short-term, like, sell a portion of the business or go borrow $1 billion and pay a special dividend. It was actually said, do anything you need to do to give us a short-term increase in the price so we can sell our
You've had that said to you?
I'm sorry?
You've had that said to you?
Absolutely. That is exactly what was said.
Do anything you can do to give us a short-term increase
Yep.
in the stock price.
Yep. We don't care what it is, whether it's a buyback, whether it's a special dividend, whether you sell a piece of the business, but you're going to do something that's going to give us a gain. And the answer is, well, no, we're going to do what's best for the company. And they were shown the door, and they ended up having to sell their position, and fortunately haven't heard from them again. But it was offensive.
Offensive, yeah.
Yeah.
I'd say. But look, you're not the only one that's happened to. I mean, there's a lot of companies under this pressure right now, and active investors are certainly playing a role. So I guess as we think about it in terms of national security, as we think about it in terms of advancing what we need as a nation, Mr. Secretary, I mean, if you've got Michael dealing with the pressure of we need something now as opposed to we need something for the future, how do we balance this? I mean, as a nation, how do we think about this, especially when China's out there putting $1 billion into a fund in Silicon Valley and Raj is up against them to get the best technology?
Yeah, this is America. Please pay attention. If you look at under this banner of being a responsible client, this is something that it doesn't keep me up at night, but it certainly is a worrisome issue because capital does move at light speed. And you do have a free market, and I am an unapologetic capitalist and free marketeer. And truly support.
Good, because you're here at the Reagan Library.
Exactly. But it's interesting what does transpire in this case, because one of the things that we have to be responsible about is the health of the industrial base. And people go, actually, that's not your job. Well, you know what? If in fact we have limited resources to produce something that we must have, yes, I am now responsible. And it's a dance that has to be done you're dancing on a bit of a knife edge because you're out there with a fiduciary responsibility to buy the best piece of gear for the most efficient and effective way you can. Now you add in, I won't use the word subsidizing, but you add in going, okay, I have to help an industry in a certain area, or I have to make the capital investments myself to have this manufacturer produce. It flies in the face of pure and open competition. But we have to live with that because we need to get the gear. And I'm not saying that in a defeatist manner. It's the way to do business. But the movement of capital is something you have to pay attention to.
Yeah, it's tricky because I, too, am a red-blooded American capitalist who believes that the capital markets usually are the very best, most efficient ability in which to divide up resources and see growth. But there's sometimes, you get to a point where if Michael has to sell a division of his company that is very promising for 5 or 10 years down the road, but that technology gets squashed because the investing public is so demanding of his quarterly earnings, you start to wonder at what point, how do we help manage this, right? What should you guys be doing? Maybe it needs to be more than $200 million that you're investing in for new technologies, and maybe you're bringing some of those new technologies to the likes of Michael and to L3 and other corporations?
Trish, there's a variety of asset classes that have importance in national security and defense. I think that the point I would highlight is as we think about these new emerging technologies, there's ample capital going into them today. So let's take, for example, artificial intelligence. Everyone likes to talk about that. Last year, there was $40 billion invested R&D and AI by the large tech companies, another $10 billion by venture capitalists in young startup companies. If I looked at the number that the Defense Department itself put in, it's well under $100 million. And so these funds are going. There's great technologies being built. Our best and brightest engineers and PhD graduates are going to these companies. So it's happening. And that's a good thing. And so I think now the next step is, okay, how do we get that tech and bring it in to solve our problems, right? My experience that I've seen in going into the Valley and the 120th corridor of Boston is, these smart engineers, they want to work on important problems. And photo sharing apps are only so much fun compared to, right? How do we make our sailors more lethal? How do we make our ships more survivable? But we have to provide them a mechanism to work on that. And so that's what long-term capital does. It's okay, and there'll be a partnership that will be built. But we have to accept that some of the sources from this technology will require us to operate in ways that we haven't before.
Absolutely.
And I want to follow on with that just so everyone has a full appreciation of the span of effort that we're talking about. If I look at my budget just in the Navy alone, which is quite a big chunk of the overall budget when you look at Columbia-class, Virginia payload, F-35, Ford aircraft carrier family, amphibs, go down the line. But we're also building high capital-intensive long-term assets, ships, aircraft carriers, 5-year builds, 4-year builds. We have to nurture that workforce. There are various organizations out there that are contributing to these efforts that have to actually, and now going back to something that we haven't talked about in 20 years, which is vocational schools, setting up, working with states to teach people how to beat a weld. And get a great job working in a shipyard. It's not just technology. We have to manage the whole span of workforce.
It's a great point, and I think this is an issue that increasingly is coming up as our economy goes through this pretty significant shift. And as we move increasingly to technology, it's not just the technology. There's lots of other jobs and lots of other jobs that people can make good livings at that we've gotten away from, right, as a nation for a variety of reasons, but we just haven't been as focused on those opportunities. So I think you make a great point, Mr. Secretary, and the reality is we've got a lot of people that can do a lot of different things, and how do we best put them to work? We have some questions in from the audience, and I just want to encourage everybody again, if you have questions, you can tweet them at us, everyone at home that's watching on Fox Business right now, and of course the audience and anyone online. But this is one of the questions that came through. Just a reminder to put them in the, if you're here at the premises, RNDF mobile app, and if you're watching on Fox Business, you can tweet them to us at RNDF. That's the hashtag for Twitter. But here's one of the questions right now, and it has to do with STEM. Does Wall Street factor the risk of the current and future critical workforce shortages in STEM and defense-related fields and its impact on productivity, quality, and output? Michael, I'll start with you on that.
Well, through our industry organization, the Aerospace Industry Group, we have made that one of our top priorities. So we are getting the word out, investing in STEM programs where we can. I've personally done it with my high school and just getting the word out. But I think we'd agree that the lack of students coming through the science areas is going to rise to a national security level if it's not remediated. And if you think about the demographics here, we have baby boomers like myself that are getting very close to retirement age, and there's a big wave of us. And the people coming up the ranks, there's just not enough of them to fill those jobs. Now, hopefully we'll figure out how to do things more efficiently and you won't need all those jobs, but the reality is this is a significant concern.
Do you find that, I mean, at your company itself, that you have engineering opportunities or opportunities that are challenging to fill with the education that...
It seems that we always have several thousand engineering jobs open across the country.
Yeah.
But we have established partnerships with several colleges and universities where we sponsor research and we get access to the student body so we could be first in terms of attracting some of those students, the better students, to these jobs. But it is an area that we should be concerned about.
Michael Leskinen, when you're looking at this 5-year time horizon for some of your investments, are you thinking about this as well?
You know, I like to say we're long-term and thinking 5 years out. Some of this is longer term, but what I would say is, and I'll use Northrop Grumman as an example, you know, they're building centers of excellence to help drive innovation for long-term programs. And so all the large primes have consolidated to the point where there's hundreds of programs that are material to that company. And so they have programs that are delivering today that are needed to hit their quarterly earnings. But if they've done that well and they've communicated expectations well to me and my peers, they have the ability to plant seeds for the future. And so we've been a little bit defeatist on this panel today, and I think there's reason to be optimistic that now with stable budgets, you're seeing more and more examples like Northrop Grumman investing in centers of excellence that should drive more innovation than we've seen over the past 5 years with shrinking budgets.
Another question is about consolidation in the industry and M&A, and do you see a lot of that happening in 2017? And this may be directed absolutely at you, Michael, because they're asking, do you think you could bring in some more tier 1 and 2 suppliers in-house?
Well, the door's always open. I mean, we love technology, and we have been a good partner for the entrepreneurial company where the founder would like to cash out but still work. We've done this over and over and over again. We've done it 100 times at least, probably 200 times. But
and does it typically work? I mean, one of the challenges with acquiring the technology is you're acquiring a company that may have sort of a different cultural feel, and they're coming into L3, and you got to incorporate them and their people and their personalities and kind of teach them your ways.
well, you know, that's one of the keys to doing it right, is making sure that the cultures work. And you know, if you think about it, we talked about development, and there's plenty of capital for development. But there's an art to doing it right. So I don't think it would be very popular for any established defense company to undertake a project that's going to run $50 million a year losses for the next 10 years until they get this. I mean, it's the wrong place to do it. You need to do it on a separate company basis. Then you can maybe buy it at the end of the day, or find a company. Many of the companies that we've acquired in the technology spaces have run losses for a decade or more. They've invested all this money, and which kind of gets redeemed when we buy it. I mean, they get the...
But in other words, they've taken the risk as opposed to
Exactly, they take the risk. And, again, it works in very specific areas, but that's...
So much M&A in the coming year, not just 17, but 18, what do you think? Much more? More of it?
I think, yes, the 17 has seen the return to some of the big deals in the M&A deals in the defense space, and there's been a number of them. We still keep to our knitting, where we buy nice bolt-on, tuck-in, however you want to call it, acquisitions that fit well with things that we do. And there's no shortage of companies in that space right now.
Go ahead.
And this is an interesting topic, being the unapologetic capitalist that I am. It's going to happen in the marketplace. The capital is going to move to the appropriate winner. I need to see an additive benefit for me in the acquisition field. And I have to do what Michael's been talking about, which is reward risk. Because the best model that I should do is say, L3, here is my problem, go figure it out. Michael goes and buys a company that helps him solve that and figures it into the price to me, but I get a value plus from that. If somebody's just buying a company for cash flow, and all of a sudden now I'm a legacy buyer from that, and I'm getting no uplift, and I'm getting one more layer of management, I know I don't have a big vote in this thing, but I got to figure out how to send a better signal that I need to see how is this going to help me as a client? Because at the end of the day, I do have a vote. And this is a discussion that we have to have as a partnership that I opened with originally, and this is what we look forward to.
The Senate has approved or voted for a tax reform plan, and expectations are they may just actually do this thing there in the House, and that it won't be repeal and replace all over again, but they may actually get this done. What is that going to mean? And I want to ask both Michaels here, you specifically, Michael, in terms of your company and your earnings and your ability to do things with that capital. And Michael, what does it mean for your portfolio if, in fact, tax reform goes through?
Well, I guess you asked me first. I would rather vote on an increased defense budget than the tax cut. So I gave that answer on this morning's show with Neil Cavuto, and I guess I just called the president's baby ugly, but I guess I'll be tweeted tomorrow. But the reality is, if we're in a budget environment that has low to no growth, all the cash in the world isn't really going to help. We'll use it in the form of dividends or share repurchases, because if there's not growth in the budget, where are we going to invest it and get a reasonable return? It wouldn't. That's why I would advocate more for a certain level of growth and stability in the defense budget. That first place.
Michael?
Well, I'd say critically, does the R&D tax credit stay? And if it does stay, then the benefit will accrue to all of the primes in a one-for-one ratio, I would expect. Now, does that accrue to the customer? I think if the customer tries to negotiate in some of the ways we've discussed here on stage today, maybe you get pieces of it, but I think most of that would accrue to shareholders.
You think
Most
it's
of
going
the
to go to
tax
shareholders?
cut would accrue to shareholders.
Okay, so that's your fear, that you're back once again to the stock price, Michael, and the demand for a higher stock price, and you're not seeing enough demand for your goods because budgets are being restricted as a way to counter the tax.
It's all about the budget. It's all about stability of the budget. It doesn't have to, listen, we talk about budgets growing 14% in some of the proposals that are on the Hill right now. That's actually probably not good in the long term. I'd like to see a nice channel of 3 to 5% growth for 5 years.
Okay. Well, we're on the way, right?
That drives investment.
Better than 3% growth.
We don't know what we're
in
going to get
GDP
for next year. There's
most
going to be a CR. So it's hard to make those longer term. It's hard to think long term when the budgets are schizophrenic.
Do you want to add to that at all? You've said your piece. All right. I don't know if you can be so anti-tax cuts when you're at the Reagan Library, but we'll save that for another time. Here's another question. How can defense companies, which are publicly and internationally traded, prioritize and maintain their priority on U.S. defense needs and have a fully national focus with all the pressures from Wall Street about quarterly financial statements? I mean, this is in part really what we're trying to get at, right? This is the essence of this conversation, and this is what we need to somehow reconcile in a world, Mr. Secretary, where other nations have a lot of money to deploy and throw at this. We have historically now had for many decades the most powerful military, and we all hope we have that for many, 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 many decades more. But it's going to require some investment, and we got competition. So what do we do?
That's a great question. If we look at China, they've weaponized capital. If you look at what they're doing on both the investing side and the One Belt, One Road efforts that they've had, it's the old joke: we've run out of money, we have to think smarter. We really, I say it, we're there now. We have to become much more innovative to increase capabilities. We're going to have to increase capacity, but I mean, that's going to come over a period of time. We have to address our capability, and this is what I talked about, a force multiplier when you talk about unmanned, et cetera. We have to find the technologies, the processes that will give us that logarithmic leap with the capital, with the capacity base that we have right now. That's my immediate reaction to that, because the capital markets are the capital markets. They're going to do what they do. One more reason, I come back to this, why we have to be in partnership, in a strategic partnership with our industrial base.
Okay.
I guess I would add, to that, winter is not coming. We have strengths that we can play to here in the U.S. We, despite our actions of our adversaries, still have the greatest movement of capital, both human as well as financial. And we need to nurture that. And one of the things I am seeing from our industry partners, the large defense primes, is a move of both types of capital to those centers of innovation, and are trying to actively through venture capital units and innovation units of their own to try to get access to that and help bring that into their products. So I think the opportunity for us is to, again, recognize these changes that are occurring, and then have the wherewithal to move fast enough and know that by moving fast, we're going to incur some risk. Some things aren't going to work, and we're going to have to change the status quo and incentives.
Do you think we've ever had as much competition, I mean, say within the last 50 years, as we have right now from China? And I know you didn't want to name sort of the other big buyer of the technology and that, who's our biggest competition. And I know you say we need to be, in competition with ourselves. But if you think about who's out there trying to grow themselves economically, militarily, it just seems that China's the one that we need to be focused on, and we need to be doing everything we can to make sure that we're 5 steps ahead.
Sure. I mean, I think we have to recognize the facts, we have to recognize the behavior, and be appropriately, actionable here.
Mr. Secretary, how do you think about it in terms of, if you compare this with past times? You said we were at that sort of moment where we have to get smarter because we're out of money, but is it nearing some kind of point where you worry that if we're not more focused on this, if we're not more vigilant and more supportive of the industry, we run the risk of not being as successful militarily in the future? Yeah,
I think, and I referenced the joke, we're out of money, we have to be thinking. We are getting funds, but to answer your question directly, Trish, I think the analogy is October of 1954 with Sputnik. All of a sudden, we used to own this space, and now all of a sudden we're hearing the little pitter patter of feet coming up behind us. Our overmatch is not as great as it used to be. We are at that, I believe, we are at that inflection point. And if you speak to Secretary Mattis and you listen to his language and his signals and his statement, let us move at the speed of relevance, that underscores it.
All right. Final thoughts from you, Michael?
Well, to sleep at night, I take great pride in the products that this industry has turned out. I don't think anybody, whether it's China, Russia, is close to the technology we command, whether it's on our aircraft, on our ships, on our land vehicles, and it's due to the men and women that work in this industry and their commitment to it and the technology investments. And I think we're all committed to continue on and make sure that the United States enjoys the technological advantages that it has over the forever, looking backwards. I mean, we've always had the best, and I think we will still continue to have the best because we have the will to do that.
So, Michael, Raj, Congress just needs to get out of its own way then?
Yeah, I mean, look, from my vantage point, I appreciate the reception that organizations in the department that are trying to do things differently, move faster, have received within the department, have received from our industry partners, have received from non-traditional suppliers, and I think we have all the right elements. We just have to have conviction to actually get it done.
Exactly. Final thought from you, Michael?
Stability of budgets, more partnership, and paying for risk-taking. And frankly, our interests on the stage are more aligned than not.
So as we look forward to the next several years, do you feel like we've reached a turning point at all? I know you say it's a very critical point, Mr. Secretary, but are things changing? I mean, is there a bigger, broader commitment that you feel in Washington right now to defense, to our military?
Looking back in the last 10 years of kind of being around Washington, in my eyes, I've never seen the stars align better for what we're facing right now. It doesn't matter if I'm in front of the House Armed Service Committee, the Senate Armed Service Committee, SAC-D. Everyone is leaning in and wanting to help. There's no partisanship. It's all about the national defense issues.
Good.
So, not to leave everybody depressed at all, I'm actually very, very excited about what can come out of this. I want to make sure we use the sobriety of what we're facing right now to make the move to go forward and grasp hold of this opportunity to really make hay with it.
Oh, that's a good way to end this panel. Thank you very much to all of you, Mr. Secretary, to Michael, to Raj, to
Thank
Michael.
you.
Really outstanding conversation. Thank you. And I just want to say for all of our viewers,